A demand zone proves something when it holds once. This chart asks a harder question. Does it keep holding? Today we read a wide demand zone defended again and again across an entire range, each defense launching a fresh rally, the floor still respected at the final touch. The lesson isn't that the zone held. It's that it kept holding long after it first formed. The chart opens in a clear downtrend on the far left, lower, lows and lower, highs stepping price steadily down. This is the decline that, at its end, leaves behind the demand zone the chart revolves around. The selling here gets absorbed at the lows, and that area becomes the zone. The larger the move into an area, the wider the zone it leaves behind. Near the lows, price prints its first higher high, and the change of character is marked on the chart. For the first time, the market refuses to make another lower high and pushes up through a prior swing high. This converts the area at the lows from simply where price stopped falling into a demand zone worth watching. The lows become an origin, not just a pause. The area where price based and turned is marked as the demand zone, the broad green band across the chart. Notice how wide it is, not a thin line, but a substantial band, reflecting the range over which buyers absorb the decline. A wide zone is forgiving. It gives price room to dip in, wick around inside it, and still sit within the zone. That width lets the same area be tested many times. Price's first return to the zone holds. It dips into the band, finds demand, and turns back up, and the higher low printed here marks the structural hold. This is the first proof that the zone is live, that there are buyers willing to defend where the decline ended. On its own, a first defense is ordinary. What makes this chart different is everything after it. From that first defense, price launches into a strong rally, a clean markup leg that carries well above the zone and prints higher, highs as it goes. This is the zone doing its work. Demand at the band, an impulsive move away from it. Price does not hover near the band. It leaves decisively, runs, and later returns all the way back. That round trip is the signature of a durable zone. After the first rally tops out and price declines again, it comes all the way back to the same demand zone and holds again. This is what separates the chart from a simple retest. The second defense lands far to the right of the first, after an entire rally and decline cycle in between. The zone was irrelevant for that stretch, yet the demand is still there when price returns. That is persistence. Price tests the zone a third time, and once more holds. By now the band has established itself unmistakably as the floor of the entire range. Each return finds the same demand, each test the same result, and the lower boundary has not been meaningfully broken. Three defenses at the same area, spread across the chart, is different in kind from a double test in a tight window. The repetition is the evidence. Look at what follows each defense, a rally. The zone is not merely holding price, it is launching it. After each test of the band, price pushes back into a markup leg, several carrying to fresh higher highs. The zone is the engine of the range, not just its floor. Every time price approaches from above, the chart says the same thing. This is where declines have ended and advances have begun. Toward the right edge of the chart, price returns to the zone one more time, and once more it is respected. After everything across the range, the band at the far right is doing exactly what it did at the far left, absorbing the decline and holding the floor. Its relevance has not decayed. The same area that turned price at the start is turning it at the end. Step back and the chart tells one story. A single wide demand zone anchoring an entire range. Every major low sits on or near the band, and every major rally launches from it. The zone is the spine the whole structure hangs from, earned by being defended consistently across the full horizon. A wide zone is durable precisely because it is wide, and stays relevant because the demand that formed it was substantial. 3 things to carry from this chart. First, a zone's width is a clue to its durability. A wide band can absorb many returns at slightly different prices and still hold, where a thin level is either hit exactly or broken. Second, durability shows in returns after absence, not just immediate retests. The most telling defenses here were the later ones, far to the right, after the zone had gone quiet for a long stretch. And third, a durable zone is a feature of the whole range, not a single event. If reading charts this way is useful to you, subscribe to SMC Chart Sense for a new chart read every week. That's the best way to keep these in your feed.